Been in the naughty corner with nickel, but what I would love to point out to everyone that if you're focused anything on nickel, really we're one of the only places on the ASX that you're really going to be able to get that exposure. So we are in the process of delivering one of the world's next major nickel sulfide deposits, and there's not too many people around that would be able to talk to that, whether in Australia or elsewhere. So what we're dealing with is a very large-scale nickel sulfide. We have defined now over 1.2 million tonnes of contained nickel metal. That makes it really a tier 1 asset. It is in Brazil, it's in the northern part of Brazil. It's a great jurisdiction to be operating in, and we've done an enormous amount of work over the last couple of years of de-risking the project, getting all the approvals in place, and putting ourselves in a position where we're ready to go. So we're going through a funding process at the moment. We're trying to pull together the debt and equity and make an investment decision by the third quarter of this year. And we've had some nice success in recent times where we've been able to put a joint venture, an offtake agreement rather, together with Glencore for some of the product that's likely to come out of the Jaguar project. We're starting to get traction on the debt funding side of things and leading into the equity piece. And when all those pieces come together, in my belief, there'll be a huge value add for the shareholders that are in the stock now, or for yourselves if you're looking at nickel exposure. There's a broad snapshot of the company with the cash that we've got, the market cap. And I think it's whilst we're at 300 odd million market cap, I think when you see the cash flows that I present later in this presentation around the project, it really does dwarf that market cap and shows that there is still a lot of upside. So as I'm going through that, just sort of keep that market cap in mind and thinking about what the upside really could be. We've got a good team in place, but I think importantly we've been able to put a really nice piece of the puzzle together in the last couple of weeks, where we've appointed a project director in Brazil named Tiago Costa. Tiago's come from other project builds. He's recently completed a 4 million tonne copper flotation circuit only 50 kilometres from where Jaguar is. He's worked with Oz Minerals previously. He's worked with Anglo American on their Minas Rio iron ore project, which is now a 25 million tonne a year iron ore operation in Brazil. So we've got a Brazilian national who's going to be able to lead the team and actually build the project. And that's probably where some scepticism had come from as to who was actually going to build it. But Tiago is the man, and we'll be there ready to support him. So Brazil as a jurisdiction, I've probably talked about this in other forums that you guys may have heard me present at. But Brazil really is a good jurisdiction. It's got a very sound tenement system. It's got a good environmental approval process, and I think with the work that we've been able to do to get through our approval process, it does show that it's a clear pathway and something that if you do the right work, that you can get your approvals in good order. I think one of the other things though is the power system, and it's probably underestimated to a certain extent. But Brazil's grid is on hydro source power, so it's a very clean source of power, but importantly it's very cheap. We're probably talking 4 to 5 cents a kilowatt hour, and if I had an equivalent demand in Australia, it'd probably be talking 25 cents a kilowatt hour. So our operating costs, and it is one thing that I really will highlight as I go through the presentation, is a key differentiator, and it's one of the reasons why we've been able to continue to work up our project whilst other nickel sulfide projects in Australia have had to put themselves on care and maintenance or shut down or not be able to operate. It's because of our operating costs and where we sit on the cost curve, and I'll talk to that a little bit more. We're located in the northern part of Brazil in what they call the Carajás mineral province. It is a prolific mining belt. It is one of the most prospective mining belts anywhere on the planet. It's dominated by Vale. Vale have been in this area now for over 40 years. They've recently commissioned what they call Nova Carajás program, which is spending another $12 billion on their iron ore and copper projects in this region. And you can sort of see top of page, the Salobo mine's the largest copper project in Brazil, one of the biggest IOCG deposits globally, doing about 36 million tonnes a year of throughput, producing about 200,000 tonnes of copper and 350,000 ounces of gold. Middle of page is S11D, which is the largest, highest grade iron ore deposit globally, about 90 million tonnes a year of 66% iron. These are world-class assets in this region. We're fortunate to be in that area. We were able to do a deal with Vale about 6 years ago to pick up the Jaguar project, simply because it's probably too small for them. They've got very large-scale projects, but this one for us is absolutely ideal. On the left of screen there, you can sort of see what we're dealing with. It's farmlands, cattle grazing country. We've bought some land there that underpins where the project is, so we've got no restrictions on movement. We're about 35 kilometres from the nearest towns. Both of those towns, the bottom of screen, Tucumã and Alanja do Norte, are about 35,000 people each. So think about that as some pretty serious sized towns to support the basis of our business. Other thing to point out there, where we are in that red box, we are about 15 kilometres from the Onça Puma ferro-nickel operations of Vale. They've just finished putting another $500 million of investment into that project, taking their project up to about 40,000 tonnes of nickel, or in ferro-nickel. It's a laterite deposit. Also in that region is Ero Copper's project. So that's the one that Tiago just finished building. It was a 4 million tonne copper float plant, and he was able to build that on time and on budget, finished that about 18 months ago. So great person to have, knows exactly what needs to be built. We're talking about building a 3.5 million tonne per annum nickel float plant. So very similar location, know all the issues, and so it gives us a lot of confidence that with all of the infrastructure that's in this region, road, rail, power, water, and then the employee base that's been in this region for 40 years that Vale has helped underpin, we're in a really, really good position to develop the Jaguar project. And I'll talk to some of these points in a little bit more. The licensing, the size of the resource, the scale of it, where we sit from a capital and operating cost perspective. I get to say, continue to highlight the operating costs at $4.43 a pound on a payable basis. So you compare that to your nickel price around $7.50 at the moment, and you can see that this project will generate very strong margins over a long period of time. When we did the economic study, feasibility study last year, economics showed about a 1.15 billion Australian dollar post-tax NPV. So really, again, back to where we were with the market cap, still shows significant upside from where we are today. So approvals. You go through the environmental approval process, you lodge your environmental impact assessment, you get issued a preliminary licence. We have that, we got that in 2024. We've last year got the installation licence, which is the second stage of the environmental approval process. We got that midway through last year, and that then allowed us to get the mining lease granted in October last year. Those three, I guess, documents, approvals are really what we need to build the project. So if we had the money today, we'd be building the project, and that's really what we're working on right now. We have land access, we've got the mining easement, we've got the environmental licences for the power line that we want to build, and we're training up the people locally in that region. Resource-wise, 1.2 million tonnes contain nickel. And you can see in that, on the right-hand side of that bar chart, most of that is in the measured and indicated category. We haven't drilled this project since the end of 2024. We haven't needed to. The mineralisation starts at 5 metres from surface, and we've hit mineralisation as deep as 1,000 metres. It's a very consistent ore body, but we've got enough drilling into it at the moment. We don't need to be doing any more, but it does underpin our reserves that we've put together. So the economic studies was just based on the open pit material. That's given us about 400,000 tonnes of contained nickel metal in reserves. That's going to give us a 15-year project life just from the open pit mining. You can see in that sort of 3D image that there's mineralisation that does extend below the pits. There's about 300,000 tonnes of contained nickel below the pits in resource. We think potentially 200,000 tonnes of that can come out of the underground in economic forms, but we just haven't done the work on that. So we know that there's further upside and mine life beyond what we've got in the economics to date, and that the mine life from the 15 years will extend further. The flow sheet's a very simple nickel flotation circuit. There's nothing complicated about it. There's no high pressure acid leach. We're not dealing with a laterite ore body. It's simply flotation. So we'll suppress the sulfides that we don't want, we'll let the nickel float to the top, we'll scrape it off, we'll filter it, and that'll be our nickel concentrate, and that's the product that we are looking to sell. And as we've been able to demonstrate with Glencore, we've now entered into an offtake agreement with them for about a third of our production, or planned production, and we're working on the balance of that in conjunction with our funding process. Because of the nature of the nickel sulfide that we have, it's a millerite, so it's a very high tenor nickel, and that means that we can produce a very high grade concentrate. So we're talking a 30% nickel concentrate. That's generally not available in the market, and it gives us a lot of confidence, and it means that we have lower logistics costs. We're only having to move about 65,000 tonnes, 70,000 tonnes of concentrate around the globe to get 20-odd thousand tonnes of nickel. And 20-odd thousand tonnes of nickel makes you a very significant producer globally. So very, very pleased with the product that we're able to produce, and I think again it's demonstrated by the fact that Glencore is now willing to enter into the offtake agreement with us. This is what we're looking at from a throughput perspective, processing about 3.5 million tonnes a year. You can see the grade there, but importantly what it's showing is that we've got consistency over this 15 years of project that we've defined in the open pit. And then we will be able to look at the underground and work out where we bring that into the profile. Probably comes in halfway through. We haven't worked through that detail as yet, but the economics that I've presented in this presentation and in the market more broadly are not reflected in not requiring any of that underground material. And what that process allows us to do is generate some significant cash. At our price assumptions that we used in the study, we're talking about 170 million US dollars, so call that 220 million Australian dollars per year for the first 7 years. That makes us a very significant cash flow generator and really does dwarf where our market cap is right now. So when I get the funding together to build the project, it's going to unlock those cash flows, and then we'll be rated very differently in the market, more on an earnings cash flow generation basis. Hence why I believe that there's a significant value uplift coming when we actually get the project funded. That all stems from having low operating costs. We're at the bottom of the cost curve. We can compete with Indonesia, and that's been important as we've talked to Glencore and that we've been talking with the financiers. I can show that I've got a big resource base. I can show that I've got long mine life, but I wanted to always show that I had low operating costs and that I could compete with Indonesia week in, week out, and we've been able to do that. So we know that if the prices fall, we're still going to be safe. We would still be making money at $15,000 a tonne, but at $17,500 a tonne, we just make more money. And that's all driven by those low power costs that I talked about earlier. And whilst not spending too long on this and where the market is, we've seen a period, and Paul alluded to it, where we've had this curve. Right in the last year, it's been very, very flat. There's been no love for nickel, but we've been doing the work. We've been getting through that. Indonesia did us some favours at the beginning of January. They tightened up the mining quotas in country. That meant that their costs of ore have gone up, their overall cost profile has gone up, which means the price of nickel has gone up, and we're a beneficiary of that. And that then leads into what we're doing with the funding. So it's probably still the most critical piece. I'm very, very confident with the things that we've done and the things that we are about to do, that we will get that funding away and make that investment decision in the third quarter of this year. Glencore underpins it. They've shown the way. Others are following now. We're working with Standard Chartered Bank on partnering for the equity. We're working with a group called Aramco on the debt. Concurrently with that, we've had some non-binding offers for funding from the National Development Bank in Brazil. And again, that has credentialised us from that point of view. So I won't spend too long on the slide, really trying to make that investment decision by the third quarter. It'll probably end up being about a 2-year build, looking to be in production by the end of 2028, and really unlocking all of those cash flows that I showed you before. Running short of time, I won't show you the nickel project. Needless to say that we do believe in exploration a lot. We want to build a pipeline of projects there. We've got some other copper exploration assets in that same region in the Carajás. If you want to know more about those, come and have a chat to us at the booth. But I'll leave you with the concept that we are a company that is poised. It's ready to go. We've done our first offtake. We're close on the financing. all of the attributes are there: large scale, low cost,